and we just finished another brutal day on the stock market. Absolutely brutal. Today I want to just cover the SPY or the S&P 500. Not going to go over too many other indices or individual stocks, but I just want to make sure that we all know that we're in turbulent market, and the expected movement is down. We knew that 435 was a critical area, and once we broke that critical level of 435, I kept saying that the likely scenario was we were going to drop down to fill the gap at 400. So the gap at 400 is way down here. Here's the gap over here on the left side of the screen. That's the gap that I'm thinking that we're going to fill. Now, with the amount of bears there is in the market, you are going to get this whipsaw action where you're going to have these very volatile down days and then these very volatile up days. If you're going to buy and hold, I would sell on the up days. As long as we're under 450, the market trend is down. Now, I do want to correct what I keep hearing. This is not a secular bear market. This is a cyclical bear market. What that means is that the overall trend is up, but we're just happen to be in a little blip that's down. This is a bull market. This is not a bear market. We're in a bear cycle of a bull market. When you understand that, you know that the overall direction still needs to be up. You just have to know your entry and exit points. One thing to look for, what I keep talking about, and if you hear it on the chat, when you see the market, here's the 435 area right here. When you see the market come down to a critical area like the 435, if you see the market hovering in that area, you know that the next movement's going to go down to the next line. So today we came down. We were up at the 430 area, 428. We came down to the 420, which was the next area that I said was the critical area. We hovered at the critical area, and then we moved down to the next area. So we're not down at the next area yet. That's the weekly. The next area is 410. So the way to look at this is you need to expect a downtrend until we get to 410. If we get to 410 and immediately bounce up, then we're coming back up to 420. Likely get rejected at 420 and then come back down to 410 and bounce up and down on that in that range like we did up here at the 440, 435 area. But like I said earlier, the longer you hang out there, the more you can be sure that we're going to head down to the next level. Here we didn't hang out. We just went past it, came back up to test it, came back down to break it. So likely scenario, you come back up to test the 420 tomorrow, get rejected, and get back down to 410. Again, if you see it come down to 410 and immediately bounce, just play it up to 420. If you see it hover at 410, then you know it's going to go down. As soon as it goes down, expect it to come back up, test it, and then continue down to the next area. That's the only way to play this market. You can't expect to buy it and sell it in 2 days or 3 days or 4 days. If you don't have day trades, this likely isn't the market that you should be playing right now, unless you're holding for a long-term scenario. I do expect to buy some positions and pick up some positions that I'm going to hold for a long time. I have been eyeballing PayPal, and I bought PayPal at 102, sold it at 95 because I saw the market broke 435, and then I repurchased it at 85. So sometimes you have to realize that not losing money is just as good as making money. I'm not in the positive on PayPal because I picked it up. I sold it at a loss, but I picked it up for $10 lower than I originally had it for. So it's $10 that I don't have to gain when it moves back up. Don't be afraid to set your stop losses. Don't be afraid to take a loss, especially when you see the high velocity selling that we've been seeing right here. When you look at the weekly chart is telling you we're coming down to the next area, which is 410. Once that 410 is filled, then we're gonna come down to fill the gap at 400 and possibly 394. The likely scenario that I see is this chop that we've been having right here will continue until around the 385 area, where the 200 SMA moves up and meets that level somewhere on the 380. I definitely think we'll break 400, but 20% off the top puts it around 385. That's why I say it's going to go down to 385. The 200 will meet us there, and then we'll continue our up pattern. I don't think we'll continue down into the 240. I always talk about the long-term trend line. When you look at the long-term trend line below COVID, there you go, right around the same area that I continue to say that we're going to drop to. Now the 385 actually takes us down below the longer term trend line. Now this longer term trend line is only based on the last 10-year bull run. It's not based on the historical trend line. The historical trend line has us going down to 250. I don't see that happening. I don't see that happening at all. But the 10-year bull run has us going down to about 385, and that drops us back into the channel of the 10-year bull run. This pop right here took us out of the bull run. It was a false breakout, and we needed to get back into the channel of the bull run. There's another channel that goes down here that's of the long-term overall market. That's not the one I expect to get into, but I do expect to get down back into this channel, which is of the 10-year bull run that we've had. Longest bull run in history. This isn't the end of it. We're at the tail end of the bull run, but I don't believe this is the end of the bull run. Have a great day. If you like this, give us a thumbs up. Share this with your friends and family. Get us some more subscribers, and come see us on the Discord so we can help you maneuver through these difficult times.